On behalf of Crosscheck Media and Biz Talk Today TV, welcome everyone to BTT's Market Minute. I am your host, Todd Schoenberger, and we're going to be talking all about Tesla and Tesla's earnings and also their strategic shift away from cars and into robots. With me today is an expert on Tesla, is Rhys Williams. He is the Chief Investment Officer at Wayve Capital in Philadelphia, Pennsylvania. And he is also the co-expert of the weekly Wave Wire, which you can watch on BTT on Fridays at noon. Rhys, let's talk about this Tesla report. It came out yesterday, but there is this strategic pivot by the company now to now discontinue what really was the I would say the heritage of their automotive business, which was the Model S and the Model Y. And now they're moving into robots. I mean, what does this say about the company and future revenues?
Well, I mean, I think they did this because nobody wants their cars anymore, or not nobody, but I mean, I think their cars are secularly challenged. And there's a couple of reasons for that. You think about 4 or 5 years ago, Tesla had a virtual monopoly on an EV car. Both here, Europe, and even in China, if you wanted a quality EV car, Tesla was the only game in town. Well, fast forward to today, the Chinese competition, these guys are just incredible right now. I was actually, as you know, I was in Taiwan 3 months ago, and I drove around in a Xiaomi SUV, and it retails for $18,000. It would be a $70,000 car here.
Oh, wow.
And, so there's just no way that Tesla, frankly, can compete in cars. So I think Elon has a great way of making lemonade out of lemons. And I think this is really what he's trying to do here, because I just don't think there's a market for a lot of his cars over time, which basically means while this period is going on, you're going to have revenue falling for the foreseeable future, because the car business is most of the business right now, while some of these other very new and exciting businesses ramp up.
Well, you're right about that. There has been a demand actually has really subsided. They saw a 9% drop in sales of their cars. And also a lot of that has to do with not having that government subsidy on the EV side. So naturally you saw, and it's not just Tesla, it's a lot of these electronic EV manufacturers are actually seeing a drop because it's just not incentivized by the US government anymore. My question, though, is that they're still going to keep the higher end value ones, probably their wider margin autos. But this move to robots, can you give the audience a little bit of an idea here? I mean, what are we talking about? Are we talking about robots that I'm going to be interviewing, or somebody's going to be asking you questions in the future, Rhys?
Yeah, probably. And once again, we don't know. And betting against Elon Musk has just been a foolish thing to do, because, I mean, he's arguably the greatest entrepreneur of the last 100 years. I mean, not just the 21st century. So I do not want to sound like I'm bashing Elon Musk, but he does have a history of overpromising in terms of how quickly things evolve. And so I think the stock positively responded in the aftermarket last night to his call that robots would have volume production into the end of 2026. And just in general, I think sort of like Trump, you shouldn't take Musk literally. I would think that it might be very unlikely that they actually hit that goal, because most of the time, he sets out stretch goals and doesn't quite get there.
Well, he is a visionary, that's for sure. He actually announced yesterday as well that was separate of Tesla was the idea of having a program that can actually repair blindness, and truly revolutionary if it actually happens. And like you said, you wouldn't want to bet against him. Let's turn the page, though, to the stock itself. The stock has been just really ho-hum. I mean, over the last year, it's up over 7%. Year to date, it's down 4.75%. I know we're off a lot today, but I mean, what's Wayve Capital's stance on the stock at this point?
Well, we are tactically short, to be honest with you, but we also have sold put options, a little bit complex at 420. So we're almost neutral at this point on the stock. So, and I'm not bashing Tesla, for the record, but I do think that generally most companies, when you have revenues going like this and some new businesses going like that, it takes a while. So I think the stock's probably in purgatory for a while until some of these new businesses really can be touched and seen as opposed to just talked about. And most of what we're talking about now, the battery business is actually doing really well, but it's relatively small. And this robot business is potentially super exciting, but it's also currently small. And then the last business is the full self-driving, which looks like, he's doing a lot of the right things. However, and I just noticed today, and we do own Google also, that Waymo was being sued because they hit a kid. And believe me, the Teslas have been hitting people much more often than the Waymo has. So my problem is, you're going to have this kind of tug of war between sort of bad news events as these new businesses evolve and move higher.
Yeah, and the technology companies actually look at those types of incidents and accidents as just really par for the course. They actually see it as just the cost of doing business.
Of course.
And they're willing to assume there's risks. And
it's much less than, to your point, it's much less than if actually a human driver is involved. Humans hit more kids than Waymo does. But it doesn't matter when that's going to be the news story. Just like airplane travel is very, very safe, but when the plane goes down, it's front page news.
Yeah, no question about that. So let me ask you this then, because as you know, you have a number of the metals that are actually used when we've talked about AI before on the shows, and we talk about how silver, for example, is a huge component for AI when it comes to manufacturing equipment. What about on the auto side with the EV side? Is Tesla stopping production? Will that have any type of a negative impact on commodities?
I don't think so, because they're stopping production because there's no demand for their cars, not because they're choosing to do this. So I think once again, he's trying to paint a positive spin on this story. But the truth is, 5 years ago they had a monopoly in EVs, quality EVs. Now they don't. At a minimum, they don't. And there's a lot of competition at the high end. And then, he is very associated with Donald Trump, which is not a great thing in Europe, let's be honest. So I just think the brand damage is really tough on the cars. So I think the faster he pivots away from consumer-facing things and more towards industrial-facing things will be better for Tesla. So that's why I like the strategic shift that Tesla's trying to do here, because the robots and the battery packs, that's something that doesn't matter how you feel about Elon Musk.
Right. And that negativity actually is not just in Europe, it's in California as well. And they've seen a significant drop there because of his connection to the White House. Final question for you. I know how you feel about the stock. I know how you feel about the company. Would you buy one of those Teslas, though, at this point?
My wife has the BMW SUV EV. So I guess we bought another one, but in general, EVs are easy to buy because they're not popular right now, for all sorts of reasons. And I think it's mostly the fear of, not being able to drive long distances.
My fear would be if you buy the Tesla, if you buy the Model S, for example, in a few years from now, it could be obsolete. Who would actually help you fix it if you need it? But that's another.
I personally wouldn't, but once again, though, he's a genius, so I'm not going to bet against him long term.
There you go. Absolutely. All right, Rhys, we're going to leave it there. I know the investors want to close out the trading day looking at those Tesla positions. So we'll see how they do after watching this program. But I'll see you tomorrow, actually, Rhys, at 12 noon. We're going to be talking all about AI. We're going to talk about post-FOMC trading. And then also this week's earnings. We just had a tsunami of earnings data and earnings reports come out. So it should be a great show tomorrow.
Who would have thought what would happen to software? Sorry, who would have thought what would have happened to software today? It's incredible. Right? It's not like they were coming in hot either. They were coming in cold.
I know, you're right. I even got a call from a Reuters reporter. One of my thoughts on Microsoft. I was like, it must be things must be moving. That's for sure. So listen, Rhys, thank you so much for joining me today. I can't wait to see you tomorrow. And remember, 12 noon Eastern time live, everyone. You want to tune in to WaveWire to hear more thoughts from Rhys. Until then, take care.
All right. Thank you.
Access real-time data and intelligent analytics exactly when you need them. Get the right data at the right time. Learn more at quotemedia.com.